I think the revenue is still very healthy. Obviously, we have the reduction year on year in terms of production. Our oil price this year was higher than last year. We still generated 160 million in free cash flow in the first half. We've reduced our debt to 320 million, which now is 0.4 times EBITDA, which is, I think, slightly lower than our target. So we're very happy with the results. I think we are now poised for growth, and we continue to have a tax asset. Given the challenging conditions of tax in the UK and the fiscal regime in the UK, but we still have a tax asset which will allow us to continue looking at growth now.
We'll get into that in just a moment. I've got that on my radar.
Yeah,
but I want to come
sure,
up to the oil price first up, because that has been fairly significant in recent sessions and even over the course year to date, down about 3.5% on WTI, and we've got Brent down 5.6% year to date when other asset classes have gone up. How difficult is the oil price picture for you?
Well, I mean, we're in the low 70s today, but we had a good hedging program in the first half and achieved about $85 a barrel, so we had a good first half. However, I do believe the oil price conditions are low. I mean, clearly we're not in windfall conditions, which is what the UK tax implies. But again, I think the big issue on oil price is Saudi has absolutely been the central bank of oil and has continued to cut back OPEC Plus and really shepherd OPEC Plus to ensure the market is balanced. And since from October this year, next month, till October next year, the original plan was to start putting some of the oil back as the demand for oil increases. China has become a bit more disappointing this year with the imports being slightly lower than expected, and so I think OPEC is probably looking at the next 12 months and seeing whether they can put as much volume as they were trying to, 2.2 million barrels back on the market.
It is interesting, isn't it? Because we have seen weaker demand, that's from China, but also there are concerns still around the United States as we talk about a potential for an interest rate cut. But in that context, you are still paying windfall taxes. And I was wondering how long it would take to get to that. And in your release, I can see it's the major item in the second paragraph. How complex is this huge tax that you're paying, and you potential to pay more too now under the Labour government?
I mean, clearly the conditions in the industry are much more healthy. You know, the US's shale oil business is healthy. The US, and we have Guyana, we have Brazil. I mean, the UK stands out. First of all, we have the only windfall tax left in the world. There were 25 countries in Europe which instituted windfall tax. The UK continues to increase the tax. We've increased the tax 3 times, and we've extended it 4 times. So I think we're a standout. I think I mean, whilst we're pleased with our operational and financial performance, we are disappointed in this further addition of punitive tax for the energy profits levy. And you know, I think this tax system will cause irreversible damage to an indigenous industry here in the UK, which is strategically very important, and will reduce investment in the sector significantly. We already have 200,000 people working in the sector, down from about 500,000 10 years ago. Our investment is down from almost 20 billion pounds a year 10 years ago to just over 3. So you know, the industry is not investing, and you know, the Chancellor talks about 25 billion pounds of additional investments. You can find that in this sector if the conditions are right for investment.